Contractors, what's up? It's Doug. Hope everyone is doing well. So this is a cool video. It's about perspective. And what I mean, though, is what I'm going to be focusing on is when you spend money on insurance, you know exactly what it does to you. It's expensive. It hurts. It costs you a lot of money. But do you know what it does to the people who are pocketing your money? Your insurance broker and your insurance carrier. That perspective is really important. After all, your pain is their gain, and your expense is their revenue. So if you're going to save as much money as you can on your insurance and keep the coverage solid and hold everybody accountable to earn the money that they're collecting from you, you need to understand what happens to your insurance premium from the perspective of those who profit from it. So that's today's video. A lot of people are not, in my industry, and my peers are not going to be happy that I'm sharing this with you, but ultimately that's their problem. So let's jump in. Let's look at a simplified insurance transaction for a typical contractor. You approach an insurance agent to go find your insurance coverage. And in theory, they're supposed to go to multiple brokers, weed out the bad ones, and select the carrier that's going to offer you the best combination of coverage and pricing. And once they find that carrier, they're going to connect the two of you together. You're going to pay your premium and get your insurance policies. And that's where most of you stop. You don't dig any further. You spend that money, and you don't know what happens to it beyond that point. Well, let's look at what really happens to your premium dollar behind the scenes. Who actually has their hands in your pockets? So for every dollar that you spend on insurance premium, about 40 cents out of every dollar is going to go to cover the insurance carrier's operating expenses. Fair enough. Just like every other business, the insurance carrier has overhead just like you do. So 40 cents out of every dollar is going to cover their operating expenses. About 60 cents out of every dollar is set aside to cover your losses. Look, you're in the construction industry, so insurance carrier anticipates that you're going to have losses, so they need to set some money aside to cover those potential losses. But if you don't have losses, and look, I know I'm Captain Obvious right now. Most of you know this. This is obvious stuff. If you don't have losses, the insurance carrier is going to use that money. That's their profit. They get to collect more money. So straightforward, correct? Well, let's peel the layers of this onion back a little bit. 40 cents out of every dollar is going to your carrier's overhead. About 15 cents out of every dollar is going to your insurance broker or agent. And we're going to come back to that because most of my frustration and where I'm going to be asking you to focus on by the end of this video is your insurance agent or broker. But just keep in mind, for starters, 15% out of every dollar that you spend on insurance premium is your agent's commission. It could be anywhere between 5, 10, 15, but it's for the most part, overall, it's closer to 15%. Is your insurance broker, so think about what you spend on insurance, get 15% of that, and do you feel that your insurance broker is earning that kind of money? Out of that 40 cents, though, the rest of it, after they pay your insurance broker, is going to work for the advisors that are working for the insurance company. So these are the team of people that are helping the insurance carrier make money and keep your insurance dollar. But let's look at the remaining 60%. 60 cents out of every dollar is going to get split up in a few ways. So first, they're going to take your money, the insurance carrier, and they're going to invest it in other underlying assets. And they're going to hope for an investment return off of that dollar. It's no real big secret that they do this, but are you constantly aware of it, that it exists? And are you always using your understanding of how that works to negotiate better coverage and pricing? Because essentially, you're giving the carrier money, and they're taking that money and investing your money that you gave them, and they're going to keep the returns on that investment. And having a feel for how well they're managing those investment returns are going to influence the types of results that you can get from that insurance carrier. Another thing that they're doing with your insurance premium is they're using your money to cover the losses for random other businesses. You're not the only company that the insurance carrier provides coverage for. And again, it seems like obvious, but really think about what's going on. You give your insurance premium up, and they're going to take your money and use it to cover losses of other construction companies, potentially your direct competitors. There's a good chance that a lot of your direct competitors are working with the same insurance carrier that you are, depending on what state you're in or what region you're in. Keep that in mind. that your money's going to cover potentially your competitors, but definitely other contractors. And as I already alluded to, so you do the work, you keep your organization safe, and you don't have any losses, yet you're still spending a lot on insurance. And the insurance carrier is going to say, they're justified in doing that because other construction companies or other issues may be having a negative impact on the return that they're getting on your premium dollar. But why is that your problem? Like, seriously, like, why is it coming down? You are doing well. You are not having losses. And you did all the work to make sure that happens. But how are you seeing the returns of that labor? What's the direct correlation? You don't really know. Oh, you may have saved 5% this year or 10%, or maybe your insurance premium only went up 5 or 10% this year, and someone's going to tell you, well, it could have gone up 20 or 30. How do you really know? Unless you know exactly how much you're making for that carrier. So let's keep going. Here's a real live example of a contractor that I recently started working with. There's a lot of moving pieces on here, but I promise I'm going to walk you through it and it's going to make sense. So we went back 5 years when we first started working with them to look at their premium that they spend. So this was the premium for each year for this contractor. So you can see they started out 5 years ago at 102,000. Current year they're at about 167,000. So over the past 5 years, this contractor has spent $664,000 on insurance. Out of that, again, the carrier has operating costs. So 265,000 in operating costs. And this contractor did have some losses. They weren't operating with zero losses. And when I spoke with this contractor, they were a little passive because they felt guilty, or they felt that they were in a disadvantaged position because they thought that they were performing from a loss perspective much worse than they actually are. They're kind of like, oh yeah, we're thankful that this carrier even agreed to work with us because we have had some losses and had some problems in the past. But when I did this simple exercise and showed them, say, yeah, you did have some losses, especially 2016, you had $150,000 in losses, and you only spent $102,000 in premium. So the carrier took a loss on you that year. But you've been with the same carrier for 7 years, and they've collected $664,000 from you, and they still have an underwriting profit of $208,000 off of you, despite the fact that you've had some losses. Completely caught this contractor off guard, like was not able to look at it and quantify it from that perspective. Light bulbs started going off. How are you demanding more money or accepting what the carrier gives you without understanding how much the carrier is really making off of you? I don't get how you've been operating like that for years now, but it's definitely a different way to do this. Just another perspective on the same money. So $664,000 was the premium that was spent over 5 years. How much did the carrier float by investing this money for their own benefit? And look, I'm not knocking the carrier. These carriers are doing good work, and they play an important role in the construction industry. But transparency is extremely important to me. And ultimately, like I said, it's not necessarily the carrier's job. It's your agent's job. Your agent was hired by you to 100% look out for your best interests. And so if they're not holding the carriers accountable or forcing transparency with both themselves and the carriers, that's a problem, and it frustrates the hell out of me. So again, how much of that premium is the carrier floating and investing it for their own benefit? I don't know. You tell me. $265,691. Let's break that down. So this broker, this company's insurance agent, that translated at about an $83,000 commission for this insurance agent over that 5-year period. All right, contractor, tell me what your broker did to earn $83,000. And there was a lot of silence after that because it was hard to articulate. And honestly, they didn't even really know exactly how much their broker made. And there's probably overrides and contingent commissions on top of that behind the scenes. But again, that's a whole other story. But $83,000 should be front of mind. Also out of that $265,000 was the carrier used that money to pay for the advisors. So your money was used by the carrier to pay for advisors to help that carrier keep your money. Hold people accountable to this. how much of that premium did the carrier use to cover losses for other construction companies? Specifically, how much of that money was used to cover losses for your direct competitors? And remember, that carrier, despite having losses, you spent $664,000 and they made $208,000 off of you if this was your scenario. So I'm beating this to death because I'm just trying to drive this home because it's important. So what now? So there's a few things you can do to put yourself in the driver's seat. One, obviously, is know the carrier's underwriting profit. Use the information I just gave you to know how much underwriting profit the carrier is making off of your premium dollar. You know that 40% of that dollar is going to cover their operating expenses. And if your agent is any good, they can show you how much the insurance carrier spends covering your insurance losses. So they should be able to give you a ballpark of how much underwriting profit you generate for the carrier. Because if the carrier is making 20 to 30 to 40% underwriting profit off of you, they either need to give you better pricing than you're probably getting right now, or they need to offer additional services that can help you save money elsewhere. These carriers have a ton of resources that are available. Your broker agent, though, needs to make sure you're getting access to them. So don't focus. I mean, you may not be able to save money on insurance, but that carrier probably has resources that are going to help you save money in other areas operating your business. Take advantage of it and stop letting this stuff slip through the cracks and just pray in your premium dollar and then forgetting and going on about your business. The second thing you can do, which is pretty easy, especially with what's on the available online today, is do some basic research. Pay attention. Take a few minutes to research the performance of your insurance carrier and the insurance market overall. A quick online search will tell you if your insurance carrier is profitable in relation to the rest of the industry. Because if your insurance carrier is if your insurance carrier is unprofitable, but the rest of the industry is doing well, and a quick Google search will show something like this. You can just take your carrier's name and say carrier ABC's overall profitability in the marketplace or something like that, or whatever. There's 1,000 search terms you can use. But anyway, if your insurance carrier is doing poorly in relationship to the rest of the insurance industry, you probably need to start looking for a new carrier. Because what they're doing is what that means is they've made bad decisions in the past. And they have to have a certain money set up in surplus to cover potential losses for all of their accounts. So they got to make it up. So if your carrier is doing poorly in relation to the industry, there's a good chance your carrier is probably charging you more than the rest of the industry is and pulling back on additional services that the rest of the industry is. But this is a 5-minute search to be able to figure this information out. There is a ton of news research available to insurance carriers and the insurance marketplace online. On the flip side, if the entire industry is doing poorly, then you can expect your insurance costs to go up. But at least you know what's coming. And you'll be able to better manage expectations internally and expectations with your insurance broker and the insurance carrier if you know that the entire insurance, like we're in a hard market. It's 2020 right now. So we're in a hard insurance market. Insurance rates have been going up for everybody. The signs that this was going to happen were out there a year and a half ago. I'd say strong signs that a year and a half ago, maybe 2 years ago, the insurance marketplace was going to go up. You want to know why they didn't tell you, your insurance agent? And it's sad, but this is exactly why. And it happens time and time again. Insurance agent is scared that if they go to you and say the insurance marketplace is starting to harden and pricing is going to go up, then you're going to say, well, then you know what? I'm going to go and shop and get other agents and other carriers to quote your business because I can't take the chance of the pricing going up. That's their burden to bear. But the insurance industry knew about a year and a half ago, 2 years ago, that insurance rates were going to go up in 2020, regardless of COVID-19. When COVID hit, that skyrocketed, but this was predicted a long time ago. So the third thing, and probably the most important thing, is to know how much commission your insurance agent or broker makes, because it can be upwards of 15, 20%. That's a significant number. And in this scenario, with this contractor that I started working with, that was to the tune of $83,000 in 5 years that the broker made off of these guys. That's a lot of money. Did they earn it? Only you can answer that question, but how do you know if they earned it? So, teeing up my last slide for you. There is a way to figure out if your carrier's earning what they should be for the amount of money that they're making off of you. Remember, your broker's making upward of 15% commission on every dollar that you spend. You owe it to your company, your employees, and your customers to make sure the broker is really earning that money. If all your agent does is renew insurance coverage for you every year, issue certificates of insurance and auto ID cards, and send you invoices, they're not earning your hard-earned money. I hear a lot of agents say, and I hear a lot of contractors that I work with say, you know what, we're not interested in having a conversation with you, Doug. Our agent's doing a really good job. They're very responsive and they're very trustworthy. Those agents aren't special. That's not worth $83,000 a year. That agent's required by law to be responsive and trustworthy. Find an agent that has the resources to help you run your business, lower your costs, and hold everyone accountable. They're out there. If you follow my Insurance Cipher channel, I will show you exactly how to spot them. There are agents out there that offer in-house safety services, boots on the ground. I have access. I have in-house safety and loss control that works 100% for you. They don't work for the insurance carrier or anybody else. You can get resources out in the field to help keep your employees safe, document those efforts, and to make sure everybody's held accountable with no additional cost. It's important to understand when you find an agent that has all of these additional services to offer, and there aren't that many out there, but they are out there, we all make our money off of the commission we get from the insurance carrier that's based on your premium dollar. So when we offer people in-house loss control, when we offer people access to our in-house legal expertise, we have former attorneys on staff. When we offer people access to our in-house claims department, the wealth of experience that we have by having such strong expertise in the construction industry, and this is an important one to it. I know I keep digressing on this one. This is a passionate video for me. Do not go with an insurance agent that does not have experience with contractors who are the size you want to be. If you are a smaller contractor and the agent has a ton of smaller contractor, good. That's all they know. How is that agent coaching and proactively managing you to help you grow and giving you insight and feedback and best practices from contractors who are doing it a lot more efficiently and a lot more effectively than you are? We all want to learn and you want to grow, and that construction experience with your agent is invaluable. So focus on an agent who has the experience where you want to go, not where you are right now. Find an agent that's not focused on acquisitions. This is also very important. There are too many, I'd say far more often than not, the larger insurance agents in this industry are focused more on making acquisitions as opposed to research and development and building a better mousetrap for you, because they make more money that way. I used to work for an agency that was like that. It's why I left, because I made far more money finding distressed insurance agents to buy than I made working and securing new quality contractors such as yourself. So what's my incentive? And I'm telling you, this is pervasive. So do not dismiss this or write this off as being a big issue, because it's huge. And on the flip side, so you want to avoid agents that are focused on making acquisitions. And it's just a simple question. Okay, how much have you grown over the past 3 years? Oh, we've grown X. Okay, be honest with me. How much of that growth came from acquisitions as opposed to contractors seeing that you guys were good and actually wanting to buy your services? Did you just buy that book or did you earn that book? Big difference. But on the flip side, agents, you also don't want to work with an agent who is potentially about to be acquired. And you can see this pretty quickly. It's the insurance agents that you go to their office and they still have wood paneling on the wall and a picture of a fish that they caught 30 years ago hanging behind them. Or, what's their succession plan? If an agent can't tell you who is going to take over the business when they retire, they're probably going to end up selling. And a lot of agents, unfortunately, are distressed right now because they just made some bad financial decisions and they have a ton of debt. The agency owners put too much of a debt burden on the agency for it to be sustainable. So they're going to sell. We want to avoid that. Quantified guidance, just quite simply being able to provide analytics. Don't just tell a contractor that they should have a $10,000 deductible. Use math to show them why. and use math to map out what the trade-off is between that deductible versus the premium dollars they're saving, or a $50,000 deductible, or a $100,000 deductible. I've had people that were shocked when you told them, you know what, you could probably take a $100,000 deductible in your policy and save a ton of money. And they were like, absolutely no way am I going to take that type of risk. But when I mapped out the math for them, they realized that they were far safer than they thought they were. And they were able to take advantage of some significant cost savings. And finally, no surprises. I don't know how many of you are in this situation, but I'm sure it's quite a few where you're finding out at the last minute what your insurance coverage cost is going to be. That's something you should be looking to find out 30 to 45 days in advance, not 3 to 4 hours or 3 to 4 days in advance. No surprises. And remember, this is at the same cost to you. When you find an agent that has these services, it's usually just part of the price you're already paying. So I hope this helps you see things more clearly. You've got a lot more resources and tools now at your disposal to lower your insurance costs. If your current agent hasn't shared any of these ideas with you in the past, you may need to start looking for a new agent. Look, go to my website. I set this up just for you. It's insurancecipher.com. I've got a ton of resources on there talking about these very same issues and more. It's free. There's no trick up my sleeve. There's no obligation. I started out as a contractor, and I've been working with contractors now for decades. And it's just where my heart is. And I'm tired of seeing contractors get taken advantage of and the wool pulled over their eyes while they're struggling to do good work and take care of their clients and their employees. So, look, I hope this was helpful. Be on the lookout for my next video. I appreciate your time, and I will talk to you soon. Thanks, folks.